Every ad for car insurance sounds the same. Enter your info, download our app, and we'll quote hundreds of car insurance policies at once to get you premiums as low as $1 a day. And I assumed it was at least mostly true. Probably not actually hundreds of quotes, and probably $1 a day is the fringe case for the least insurance possible. But I thought that the concept that insurance brokers can get people the cheapest policies is conceptually correct. So, I spent the last year getting my insurance license and laying all the prep work to launch a new independent auto insurance agency, thinking I could help people save money while I also make money. But the more I learned about the actual industry, the less I kind of believe that right now in 2025, this value proposition was right at all. I'm going to share 3 assumptions I had about car insurance that turned out to be wrong, and how the truth of what I learned completely changed how I think anyone can actually get good and cheap auto insurance. Let's get started. Assumption 1, all agents shop policy prices. Alright, now imagine you're a big giant multi-billion-dollar insurance company. Everyone knows your name, knows your animal-based mascot. Whenever people are thinking about getting car insurance for themselves, they're knocking on the door of your website to see what price you'll give them. You have economies of scale in basically every part of your business, and after decades of profitable operations, you're basically buying railroads for fun. Do you rely on outside contracted agents to service your prospects and grow your business? Absolutely not. You're hiring thousands of your own agents, putting them on payroll, setting them up with offices, and making them sell only your products. The first assumption I had before becoming a licensed agent was that all insurance agents were independent agents or brokers. It turns out that the largest insurance companies sell almost exclusively through their own agents called captive agents. So let's take a look at this list of the top 10 largest P&C personal lines insurers in California for 2024. State Farm, Southern California AAA, Northern California AAA, Allstate, Geico, all write using captive agents, and that's like 70% of the California insurance market. Cross-reference this with a Google search of who has the cheapest auto insurance, and you'll commonly see State Farm, AAA, and Geico pop up. Now, if independent agents can't sign policies for the insurance companies with the cheapest auto insurance premiums, how are they getting the cheapest rates? After realizing this, I'm immediately thinking of what could possibly be going on here. Maybe smaller insurance companies have to compete on price because they don't have market share, which means they have to just accept lower margins in order to win business. Maybe smaller insurance companies that use independent brokers don't spend as much on football commercials and marketing in general, and only have broker commissions as their acquisition costs, and therefore can offer lower premiums. Maybe the internet only talks about the top 10 biggest insurance companies because of the very fact that they're 70+% of the market, which is why AAA and State Farm appear in searches, but in actuality, there's hundreds of insurance companies operating in California right now, all with very small slices of a very big insurance pie. And it's exactly the size of that pie that brings me to my second assumption, which is that Assumption 2, brokers have access to every insurance company. Outside of the largest, most well-known insurers not using independent agents, independent insurance agencies have to individually contract insurance companies to sign policies for them. It's called an appointment, and it's a very official legal thing which requires filing with the state's Department of Insurance. The sheer number of insurance companies operating in California and the legal requirement of getting appointments to sign policies on their behalf makes it nearly impossible for any individual insurance agency to have all of the insurers. So let's go back to those ads for a second that shop hundreds of policies at once. It turns out that most ads you see online for services that comparison shop quotes are not actually brokerages or insurance agencies themselves. They are usually marketing companies that specialize in generating leads at the cheapest price possible. They're called lead aggregators, and their business isn't to set you up with insurance, that's to set you up for insurance agencies. And not just to a single insurance agency either, but to multiple at once, several times, over many weeks and months. This is how you end up with a phone that won't stop ringing. And check out the manipulation they use to get to shop hundreds of policies at once. What they really mean is they'll sell your information to a dozen auto insurance agencies, some of which may be captive, some of which may be independent, and maybe they'll be able to together generate 100 quotes. In practice, what really happens is an independent agency will usually have a handful of insurers they have a good relationship with, maybe 3 to 5, all providing competitive quotes for certain parts of the market, and they'll just use those insurers to quote. No one has all the insurers, it's a terrible operational idea, and a nightmare to manage all those appointments. Alright, assumption 3, customer loyalty. Hey, so insurance companies don't actually care about you. I'm sure they hope that you're well and good fortune and all that, and the customer service rep you're talking to really does want to help. That's not what they're in business for. I used to think that having years with the same insurer meant something, literally anything to them. I assumed that because I was a good low risk part of their policy portfolio, I would get reduced pricing because I never filed a claim and was valuable to their underwriting bottom line. It turns out that the good driver discount is state mandated by California, and outside of even that, there's no real financial benefit for staying with the same insurer, and staying might even be a negative. To understand why, you have to understand a little bit more about how insurance companies think about their business. Insurance companies aren't in the business of insurance to make money on insurance operations. They're in the business of insurance to get access to the float that insurance premiums provide in order to make investment income off of that pool of money. This means that what insurance companies are most interested in is not underwriting profit, but the size of the premium pool that is available for investing. Premiums earned is what they call it. Underwriting profit for insurance companies average pretty close to zero. Some years they'll make money, some years they won't, but basically every year they're guaranteed to make at least something on the investing float. Now again, let's go sit in the shoes of the billion-dollar insurance company. Do you focus on the extremely risky, hard to calculate and predict portion of the business, or do you focus on the portion that generates practically guaranteed revenue every year? And because they're not terribly interested in an underwriting profit, they are incentivized to do as little as possible that keeps someone a customer of theirs and no more. The more likely you are as a policyholder to stay, the less they have to do to keep your business. Now for the weird part. I don't think any of this is actually particularly negative. Profit operations exist to maximize profit. At least their behavior is predictable, right? Why I bring up that loyalty doesn't exist for insurance companies is because I think it explains why independent agents and brokers so often beat existing policy prices when the underlying economics say that smaller insurers shouldn't be able to beat the larger insurers because of economies of scale. It's because people don't shop their policies often enough. Think of your time with an insurance company, and each year that you stay with that company, they're taking you farther and farther away from the true market price because they think you're more likely to stay. If you haven't shopped your policy in 2 to 5 years, and especially in the last 2 to 5 years, then the prices you're seeing when you're shopping with an independent agent isn't your agent beating a captive agent. It's just your old incumbent price versus the price of new business in the market. All right, so how to actually get the cheapest premium price, the cheapest premium price. Step 1, if you really wanted to get the cheapest price, you'd fill out quotes for all the largest insurance companies in your state, and then ask 2 to 3 independent agents that have appointments to mostly different insurers to have them quote you as well. If it sounds suspiciously similar to what those marketing lead aggregator companies are doing, it's because it is, except you're controlling who you give your information to, and you're not getting a random grab bag of agents. All right, and then step 2, repeat that every year. I think in practical terms, you might end up saving around $10 to $15 a month, or a couple $100 a year, between the cheapest and the second or third cheapest options maybe. And it'll take about 8 to 10 hours of your time. How to actually get cheap but good insurance and keep your sanity. If a captive agent could shop for you, they would, but they can't. So the reason you go with an independent agent is so that they perform that shopping labor for you. They won't have the biggest name insurers, but the prices will be closer to the actual market. When you sign through an independent agent, just ask them to shop your policy again come renewal time. We'll most likely ask you anyway. Wait, don't agents get more commission on new policies? Yeah, as a new insurance agent, I'm technically incentivized up to a point to get all of my clients on a revolving door of policies. 10 to 15% of the annual premium is the commission for the first year, and it renews at 2 to 5% each year after that. Insurance companies get mad though if every policy I bring doesn't renew at the end of the year, and they expect some clients to become long-term. You could think of this advice as perversely beneficial to independent agents like me, and it is. But I also tend to think that it's more of a clear indicator of how insurers themselves think. They're more willing to pay for new business than they are to keep the business they already have. Alright, so in summary, any independent agency can't actually guarantee that they can get you the cheapest insurance price that's available on the market, because captive agents have insurance companies with stronger pricing power behind them. However, a single captive agent can't guarantee that theirs is the cheapest either. They can only quote the one insurer they work with. Getting the cheapest rate is a lot of effort, and usually not worth the mild savings, which is why I think the real reason that independent agencies are so popular is because they can get close to the cheapest premium rate with the least amount of work on your part. No one really wants to do the work for the cheapest policy. Before I outro this video and ask you guys to like and subscribe, I just want to point out a very nitpicky thing. I kind of use the term broker and independent agent interchangeably because they perform the same function, but legally they're pretty different. Both brokerages and independent agents help people find insurance at the right price, but legally some requirements are different and there's some small pros and cons to each. Maybe I'll do a video on it at some point, but it's pretty nitpicky, and functionally they still have the same benefit. Now then, if you watched the whole video, thank you. Please like and subscribe if you haven't already. We're a very small channel and doing a very big project, so we appreciate all the support you give us. We create a free coverage quiz so you can check to see if you have the right coverage amounts and the right actual coverages for your life situation. This is probably the place where you can save the most money that I don't think many agents necessarily talk about. The quiz is free, there's no phone or email requirement, so you can just see your quiz results right away. And at the end, if you're interested in getting your auto policy with us, you can fill out that contact form and we'll get in touch with you. Thanks for watching, and see you next time.